Hi, and welcome to Hedge Fund Investor. I'm Carl Michael Seiding. Let's take a look at Novo Nordisk today from the P equals F times V perspective. So remember that this is about prices being made up of fundamentals and valuation multiples of those fundamentals. So for example, you have sales and you have price sales. So if you have 100 in sales, it might be valued at, let's say 2 times annual sales. So it might be valued at 200 if you have sales of 100, or equivalent from this perspective. So Novo Nordisk is the Danish pharmaceutical company famous for the Ozempic weight control drug. We are starting with highlights here in the Koifin free online stock research resource. I'm clicking highlights and I'm checking their revenues. Right now I have this one set to quarterly numbers. This is what the revenues look like from a 10 years perspective in terms of quarterly revenues. Let's change that into annual and see what it looks like. So this is the revenue chart. It should be, of course, be the same chart, just with a little more coarse-grained, just being annual numbers rather than quarterly numbers. Let's hover here above annual growth rates. So as you can see, the growth rate has been between 25 and 30% the last few years. But it used to be closer to maybe 10% per year. And I have a suspicion that we might be going back down to this like 10 plus % per year in growth rates after this growth spurt that we got due to the Ozempic weight loss drug. And the reason that we are looking at Novo Nordisk today at all is because, let's click here on snapshots and overview. It's because of this huge price drop from over 1,000 to around 500. So we had a halving of the stock price in about a year. Of course, after a huge run up over 5 years and over 10 years. So this has been a huge success. Actually, from 2016, where it was at around 100, to the peak of 1,000 some 7 years later, and now we're down at 500. So is this a good opportunity to pick this stock up or not? That's what we're here to see, using the P equals F times V framework. So let's get back to the financial analysis and the highlights. And as I said, my view of these growth numbers is that maybe we are going back to the old growth rate level of around 10 to 12% perhaps per year. Look at some of other numbers here. We got the EBITDA margin. It has been expanding very rapidly in the last few years. Can they stay at this level? Let's look at the net income margin. That has been a bit more stable, I would say. Like they used to have a 34%, they're still at about a 34%. So I'm kind of confident they will probably be able to stay here between 32 and 34%. So I'm not really going to do anything with the margin forecast. Let's take a look at the earnings per share growth rate. We had one outlier year here in 2023, so let's exclude that from our minds and rather see here that, yeah, sure, they have been able to grow between 10 and 20%, with 20% being at the upper end of the range. They have been able to do that before Ozempic, but also have many years sometimes with just a couple of % earnings per share growth per year. So again, based on the likely sales growth numbers of maybe 10 to 12% and stable margins more or less, I'm not really confident to predict much more than 10% annual earnings per share growth. So that would be a little bit better than the average economy, than the average stock, the average company in the stock index. And that also means that they shouldn't have at least not much higher multiples than the market in terms of earnings multiples. We can't really look at sales multiples here because they have so much higher margins than the average company. So let's take a look here. Financial analysis, highlights, multiples, and let's see what can we tell about their multiples after this huge price drop. So let's scroll down here to price earnings last 12 months. So looking backward at already reported numbers. This is my preferred measure because it deals with actual facts, and it deals with what does the market do typically once it has gotten a set of accounting facts presented to it. What type of valuation does it actually apply then? And for Novo Nordisk, many years ago, when they were having this growth route, just growing a couple of percent per year, they were down to, as we can see here, maybe 15, 16 times earnings, which is coincidentally just about the market average. For the Standard & Poor's 500 long-term historical average is about 16 times or 16.5 times backward-looking price earnings levels. And then for a while, during the absolute Ozempic euphoria and bull run for the stock, everybody thought that this is the place to be at all costs. They were valued at 50 times peak earnings, which of course in hindsight wasn't very smart, probably wasn't very smart there either. But how about now, after getting the stock at half price? Well, you can see here we're still at 23.1 times backward-looking earnings. So we're at 23, excluding the kind of short-term bubble here, or the outlier years of 2022 to 2024. 23 is looking a bit like maybe the average, maybe a little bit lower than average for Novo Nordisk. And given what I've said, that they probably can muster EPS growth a little bit better than the average market, they should also be valued a little bit better than the average company, so a little bit more than 16 times. But should they be at 23 times earnings? I think that might be a bit of a stretch. So I think fundamentally Novo Nordisk isn't that cheap. It's more or less fairly valued, and possibly you could say that they don't need to do that good in fundamentals, in a little bit of a rebound, in order to attract investors that remember the peak years and remember the peak valuations. So this might very well be a pretty good time, short term, to get into the stock. But I would say from a fundamental perspective, 23 times earnings, it's just about fairly valued. It's not really cheap, despite the quick halving of the share price. This is the beauty of the P equals F times V framework, that we can actually discern the growth rate for fundamentals and the valuation level for fundamentals, and get the complete picture of whether this is warranted or not, whether it gives us the upper hand of betting on the stock or not. And I think that for Novo Nordisk, right here, right now, at about 500 per share, it's not that attractive a bet.